Good morning, and welcome to Investment Talk TV. And now, with the latest information on the stock market, your investments, and retirement opportunities, here is LPL Financial Advisor Paul Meyers.
Hey, a big good morning to you. It is so good to be back in the live version of Investment Talk TV. Easter has passed. I hope all of you had a great Easter. And I got to see some friends and relatives and give them all hugs and maybe eat some good food and do some other good things on Easter. It's just plain good to be back. And I'm joined, of course, today by Devin Beal. Good morning, Devin. Good to be here, huh?
Good morning, Paul. Yes, great to be back after a week off.
Yeah. And Dave McGatlin. How are you, big guy?
Good morning to you guys. Happy spring. It kind of feels a little more like spring in the air. Of course, it's kind of wet, but...
Boy, I tell you what, we had some good weather in here. Friday, I guess it was pretty nice and getting a little windy and cooler here over the weekend, but I think we're going to be headed towards another couple of months. Who can say?
Yeah. Well, we say usually you're out of the woods after Memorial Day, but we got a ways to go. So.
Out of the woods? I'm not going into the woods. That's all there is to it. It's too cold and windy there. Well, anyway, wherever you are this morning, this is Investment Talk TV, and we have a great 30-minute program set up for you today. We've got a lot of good topics we're going to be covering. And, once again, I just want to kind of remind people why we do this. Why do we go through all this? And it's because we want to bring things to you that are going to be important to you as you move along that path towards retirement. And, you're thinking about, am I headed on the right track? Am I investing in the right things? What's my retirement going to look like? We've got a lot of information that might be helpful to you. And in addition to that, there are always a lot of new things coming out, things happening in the market. We want to keep you posted on all that because we think it is important. And then finally, one of the things that I think is pretty cool about our show is that we are local. We're from here in North Dakota and western Minnesota, and the people we get to see and the people we get to help are right here in the state of North Dakota or western Minnesota. And that probably is you because, let's face it, if you're watching this show, that's probably where you're residing right now. So if you've got a question or a concern, our phone number was up on the screen a minute ago. It's 701-365-8083. We'd urge you to give us a call. And even before that, I want to tell you about a pretty cool seminar we have coming up. We're going to be doing a number of seminars this spring throughout North Dakota and western Minnesota. And the first one that we're ready to announce comes up on May 5th in Bismarck, North Dakota. It's at the Broadway Grill and Tavern. You're all familiar with it if you live out there in the Bismarck area. That's kind of a fancy picture of it. I'm not quite sure that's exactly what it looks like, but I like the steak in the lower corner of the picture.
Absolutely,
that's pretty good.
Yeah.
We're going to have a dinner seminar in Bismarck on Tuesday, May 5th, starting at 5:30 p.m. We've got a familiar title up there, Dave. Investing and Retiring in These Volatile Times.
That's right. Boy, does that sound like it's describing the last 3 years of the market for sure.
Well, it really does. And, we were debating back and forth about a title for this, and that pretty much covers it. I think one of the things that is going to be pretty interesting is we're going to have a chance to talk about some interesting securities that we've got available, some exchange-traded funds that may be interesting to you that provide some protection on the downside as well as a lot of upside possibilities. Great replacement for the people out there who are worried about the market. Just a great way to ease yourself into the market with a portion of your portfolio. In any case, if you're in the Bismarck area and you'd like to meet with us in person, May 5 is the date. We're going to be there at the Broadway Tavern and Grill or Grill and Tavern, and you get a dinner and you get a chance to talk with us, and we get a chance to tell you what we think is going on in the market. Should be a lot of fun. Obviously, we'll have more on that in the ensuing weeks. In the meantime, one of the first areas that we always take a look at on this show is called the Legacy Week in History.
Because whatever mankind must undertake. I have a dream.
Dave, I heard him say in that little presentation, I have a dream.
Yeah.
Well, I have a dream that you're going to tell us about somebody fascinating today.
Well, this is one of those things I'm going to make your dreams come true.
All right.
So, April 12th, 1945, President Franklin Delano Roosevelt unfortunately finally passes away due to a massive cerebral hemorrhage or a brain bleed on April 12, 1945, in his southern home and down in Warm Springs, Georgia. Later that evening, Vice President Harry Truman was officially informed by Franklin's wife, Eleanor, and she famously said he asked her if he could do anything for her, and she famously replied, "Is there anything we can do for you, because you are the one that's in trouble now?" So at the time in 1945, World War II in full swing, the U.S. fully mobilized, and unfortunately about 3 to 4 months later, President Truman then at the time was informed of the Manhattan Project, and then 4 months later in August, the atomic bomb being dropped there on Japan. So quite a whirlwind there for over that 4-month period.
Boy, that was a time period, wasn't it? I mean, Franklin Delano Roosevelt, 4 terms as president. And of course, as a result of that, they passed some constitutional changes that limited the number of terms a president could have. And a lot of people still talk about term limits for other offices as well. That's just been a constant debate for the last 20 years, and we're not going to get in the middle of it that much, I know. But in any case, that was an interesting time period. We always like to look back in time because it adds a little context to where we're at today. And, you know, there's also a lesson to be learned from looking back in time. How many people got nervous and worried over what the market's been doing the last couple of weeks? Let's talk more about that during the stock market snapshot and the market week in review and all those other things. Should be pretty interesting to talk about that. We're going to jump ahead now and talk about what's on our agenda for today. And for that, I'm going to turn to Devin and say, Devin, what is on the agenda for today?
We're going to take a look at the stock market snapshot. Then we're going to go to 5 points in 5 minutes. And our main topic today, Stock Market Snapshot Extended Edition. So we're going to take a deeper dive into what's happening in the market right now. And if we have time, we'll look at viewer mailbag and take a couple questions and then finish it off with the Stock Market Week in Review.
You know, that's a great summary, Devin. And when you talk about if we have time, we're going to take a look at the viewer mailbag. Man, the questions we've got today are great, but I've just been having people come in like mad with questions that I hope we get a chance to talk about. I guess if I quit talking, there's a better chance we'll get to them. Yeah, I know. Let's take a look at the stock market snapshot. I think we actually have a nice little intro to that. Here's the Legacy Wealth Management Stock Market Snapshot. A quick look at the stock market and the investment world in the last week. Did you guys notice that was a Polaroid camera?
I did.
Yeah, pretty cool. Everybody had one of those a long time ago. Dave, let's the three of us talk a little bit about what went on, and then let's spend a little more time in the second half of the show really digging into that, because once again, the last couple of weeks, I mean, it's enough to make you get
investing
older,
in these volatile times is what it's
these
been.
Are volatile times.
You aren't kidding. Yeah.
So what have we had, guys? We tell us what's on your mind.
Wednesday this past week was one of the biggest days. The market up 1.5–2%, all in a single day, based on a potential peace treaty between the United States and, of course, Iran, and with Israel involved as well. So market reacted very positively to that. Crude oil prices, which have really spiked up this past month with this Iran conflict, started to come back down, kind of oscillating back and forth. The market's still trying to make sense of that, but the market has just been really hungry for any piece of news coming out of the Middle East, and that has been feeding that volatility that we've been seeing.
You know, Devin, for a long time, Dave and I have been talking about the hokey pokey. Do you remember the hokey pokey from your younger days?
I do.
We've been talking about the hokey pokey with tariffs, and now we had the hokey pokey with the Iran war. We had a little bit of that towards the end of this week, because after the market had been beaten up for the last 3, 4, 5 weeks, really. Last week, though, not this week, but the week prior to that was actually a positive gain in the market. And then along came this week, and they broke the news that, we're going to stop bombing, and maybe they're going to open up the Strait of Hormuz. But then started off on Thursday morning, it looked a little negative for a while, but it's the hokey pokey all over. You put one foot in, you put one foot out, and they keep twisting it all around. Anything on your thoughts on that, Devin?
Yeah, absolutely. Well, we certainly see a lot of movement when it comes to news, and that can be different every single day. We've also seen a lot of sector rotation this year, with energy being up 33% year to date and technology down about 7%. So it kind of shows us, we talk about sector rotation a lot and how different market sectors react differently to what's happening in the market and geopolitically. Obviously, we've seen that with Iran. When we look at those numbers, 33% year to date, that's pretty shocking. But then we kind of have to take a step back and look at what's been happening the last couple of years, because technology is down right now year to date, but they've been really leading the way the past few years. So it's important to not only see where we are at now, but what's the long-term growth of each of these sectors and all the sectors in the market.
Great points, Devin, because, when you think about technology, if technology is up 100% in the last 3 years, and it probably is, but then it declines 7% in a 3-month period,
Right.
Is it really time to throw in the towel or jump out of the airplane? I'm not so sure it is.
I'm not so sure it is. Yeah, I mean, technology is probably here to stay for sure. But all the different sectors of the market, we're kind of seeing from 2025 to so far, the first quarter of 2026, we're kind of seeing those indexes kind of flip a little bit, where the sectors that have trailed behind for years are kind of at the top, and the ones that were leading kind of fell to the bottom. But that's very typical when we see kind of correction markets and with that volatility. So pretty normal behavior, really, nothing out of the ordinary.
What about unemployment and jobs and things like that, Dave? How's that been going?
Well, unemployment and jobs. Unemployment kind of met expectations here. A little bit of a addition with jobs added, which was welcome news to Wall Street, but the total jobless claims for those still staying on unemployment insurance kind of kicked up just a notch. Nothing too crazy to write home about, but we're kind of in that status quo, but still at basically full employment at 4.3% is the current U.S. unemployment rate. So that's not all that bad, especially when we look at historically the last 50 years, the average is over 5%. So not so bad. And then, of course, that leads into the conversation with the Federal Reserve and those interest rates. What are we going to do here with the jobless claims kind of coming down and being pretty status quo? But with oil prices coming up, inflation kind of held steady, but those were February's numbers, not March. So it'll be really interesting to see, because inflation did tick up a tiny bit with core inflation around 3%. That does not include that energy factor. So inflation becomes a question. And right now, not really going to see so much room for rate cuts here in the immediate future.
Guys, you brought up some good points here. And I think if there's a conclusion that can be drawn, it is that the market, think of the market as maybe a person. I don't know if it would be a man or a woman or what, but if it's a person, very touchy.
Yeah.
If you know anybody out there like that, very touchy.
Very
One
sensitive.
little thing can set them off.
Yeah.
And really, the market is that way right now. One little item, if all of a sudden Lebanon decides that they're not too happy with the peace agreement, it could kick the market for a while. But what I like about it is the underlying positive approach that at Legacy we take, and that is that we don't know what's going to happen tomorrow, next week. We don't know. But our feeling is that a year from now, the market's going to have improved considerably. And that's why we continue to be positive towards people, and we continue to tell people, look, if you're satisfied with your 3% earnings right now somewhere else, go ahead, that's fine. But we believe that there are a lot of opportunities out there, and at Legacy Wealth Management, part of our job is to help people get past the challenges and take advantage of the opportunities that are out there. And boy, there's a lot of opportunities out there. And once again, we're going to get a chance to take a look at those in person on May 5th in Bismarck, and some other dates in Grand Forks and Fargo and perhaps up in Grafton. So we're looking forward to getting out there among the humans and talking about this kind of stuff and moving on from there. I think we do have an index slide, but we can skip past that right now and move into our 5 points in 5 minutes. And I think we've got kind of a wild and crazy introduction to that one. Yeah, let's hit it, guys.
Every week, the advisors at Legacy Wealth Management, with the assistance of economic researcher Mick Higley, comb the economic reports, and we come up with data and information that's helpful as we analyze the markets and put together our advice. We call this
5 points in 5 minutes.
See, we figure we have to have a little bit of silliness in among, talking about charts, maps, and graphs and numbers and things like that. But the important thing really is this. what can we do to help you as you move along that path towards retirement? And what can we do to help take some of the mysteriousness out of the stock market and the whole investing process? And that is one of our big challenges and one of the big things we like to do every day. Along those lines, we go into 5 points in 5 minutes. We talk about some things that might be impactful. Dave, what do you have for
Well,
us?
I'll get started. Hey, it's the middle of tax season. Well, not the middle, but the very end of tax season. And we talked about retirement. Don't tax my retirement. One of the most tax-friendly states in the entire union is, believe it or not, Alaska. Alaska does not have a state income tax, which means it does not tax pensions, IRAs, or 401ks. In fact, in 2025, Alaska has basically an oil fund where if you are a resident of the state and you meet certain parameters, you will get paid a dividend just for living there. And in case you're wondering, that's about $1,000 per citizen of the state of Alaska. Alaska being considered one of the most tax-friendly states in the country. However, they consistently rank in the top 10 as being one of the most expensive for cost of living.
It's funny that you should mention that, because as you were talking about it, I was thinking, golly, you could move to Alaska and you could go salmon fishing.
Yeah.
But pretty soon you'd probably get tired of that, I
You
suppose.
probably, yeah. And the winters think it's bad here, yeah.
Yeah, it probably gets pretty cold up there. Devin, let's talk about billionaires and New York City and all those other things.
That's right. An apple a day keeps a billionaire in town. The Big Apple, the New York City, has the highest concentration of billionaires in the world, with roughly 110 to 120 living in the city limits. That might not be surprising, but the number 2 might surprise you. It's Moscow, Russia. They are second in the world with roughly 90 billionaires. That's not what I would have guessed for second.
Yeah.
No, I wouldn't have guessed that Moscow would be real big in the billionaire category. And
Apparently.
by the way, those of you out there who are billionaires, our phone number again, you'll see that at the end of the show. There it is, 701-365-8083. You can call right away. But seriously, for those of you with slightly smaller amounts, you should remember that number, because that's what we do every day, is help people just like you consolidate your accounts and figure out what to do if you're changing jobs, or what to do with your 401k, or if you're, isn't it amazing how many people have old 401ks at places they used to work?
It's a lot of them. Yeah.
And they want to do something with it, and we've got a few good ideas. Hey, let's talk about retirement plans and things like that. We call it the 401k coin flip. According to the Bureau of Labor Statistics, roughly 74% of U.S. workers have access to an employer-sponsored retirement plan, like a 401k or a 403b or a 401a, lots of different retirement plans. But of those who do have access, only 56% participate in those plans.
Only half.
And Dave, I think you and I were talking about this earlier this week, talking about the 401k is really one of the primary vehicles for people to accumulate enough wealth to be able to retire comfortably.
Right.
It's no fun to be 72 years old and contemplating retirement and saying, well, I'm going to have $3,000 a month coming in from my Social Security, and that's it.
Right.
The 401k is a heck of a vehicle, and for those of you out there who have it, you want to make sure it's working hard for you, because if you do end up getting a pretty healthy amount in your 401k and it's only earning 7% per year, and inflation is running over 3%, you're not really making much of a gain. We need to help you get into better performing securities. Dave, I just
No, I was just going to say, for the 44% of people that don't participate, my piece of advice, you're leaving money on the table, because a lot of employers match, and just kind of leaving those potential earnings there right on the table. So definitely something to consider, especially if your employer definitely matches. But
you know what? I'm going to do something really strange now, because we've only got about 9 minutes left till the end of the show. So hang on, folks. Don't run away anywhere. But instead of hitting our next 5 points in 5 minutes, let's jump into our main topic, because this is a main topic that needs to be talked about. We called it the Stock Market Snapshot Extended Edition. And I think it's important. The stock market has been really moving on the news lately. And why wouldn't it be? I mean, earnings are important, but it's getting to be passé when you're bombing another country or they're firing missiles at other places too. So let's Dave, you and I kind of got together to try to figure out what the future was
We
going to
did.
look like, and I
Yeah.
think we have it there. There we are.
We got a self-portrait of us contemplating it. Yeah.
That, I swear, was taken just the other day. It's funny, the crystal ball with economic forecast, it looks like your aquarium, Dave.
It kind of does with a tornado in it. I like the oil rig in there because we talked about oil prices in Iran. So, yeah.
Well, we picked this little graphic just to show that we're really taking a look at what's going on out there right now and trying to examine the future. Let's take a look at topic number 1, Devin, kind of an important concept.
Yeah, so we're going to look at the Iran conflict, and I think it's important to take a look at where we started at the end of February and where we're at now and everything that's happened in between. So we'll take a look at the 3 indexes. The S&P 500 was at $6,878. We got the graphic there. I look pretty worried
he looks
there.
a little nervous.
Devin, you
about it.
look a little bit troubled there, but that's interesting because that's actually a fairly close picture sometimes when I wander by Devin's office. He'll be looking at the screens, and we're trying to figure out what we can do to help people.
Absolutely.
But now you're about to tell us when the conflict broke out on February 28th, you've got some numbers as far as where the S&P, the Dow, and the NASDAQ were.
Yes, so the S&P was at $6,878. The Dow was at $48,977, and the NASDAQ was at $22,668. That was at the end of February. Now, what happened in between then and now is each of those indexes lost about 8% in value in the month of March, and that was due to the oil prices spiking 50% in just a few weeks.
So what you're telling me is that people got a little nervous in the month of March when the markets went down 8%. And Dave, we told people, hang on,
Hold
don't
steady.
give up the ship.
It is a temporary problem. What's the analogy you use all the time on the airplane and turbulence?
Yeah,
right?
you don't want to jump out at 30,000 feet.
Right.
So then, Devin, let's go back to the present time. We saw where we were. We lost 8%. How are we doing as of April 12th?
Well, the NASDAQ is looking flat, or actually even slightly up now since the end of February. The S&P is down 1%, and the Dow is down about 1.5%. So going from down 8% now all the way back up to either flat or down 1%, those are some pretty big swings there, and it shows you how quick the market was able to recover when they heard some good news. And just goes to show how patience can really be an asset for you.
Boy, think of those people who bailed out.
Right.
Pick any particular crisis that you want to. But even the most recent one a year ago in March, when the tariffs were announced, and people who got nervous, naturally, and said, you know what, I just want to go to this 3% CD or whatever it is. That's understandable, but we kind of preach patience. And I had a guy in my office today who's been around for a while, and he quoted me something that he said his dad said. And I thought, yeah, my dad said the same thing. And that was, his dad said, well, number one, he said, if you're paying some taxes, that means you probably made some money. And he said, number two, don't abandon ship. You just keep heading in the direction that's a good direction, and you're going to do just fine. So that was pretty good. Yeah. So crude oil prices spiked about how much during this time period?
It was like up about more than 50%. So, I mean, right now we're just under $100 a barrel, and I think it was slightly over that here a couple weeks ago prior to the Iran potential peace agreement.
So in the minutes we've got remaining here, let's talk a little bit about the economic health of the country right now. I know we kind of get into the weeds with a lot of these numbers, but some of these things are things that we look at every week as we try to figure out, well, what's going to be the best course for our clients. Dave, what do you have on this?
Well, right now we talked about the unemployment rate pretty much holding steady, even ticking down just a slight tiny bit. That's good news, right? Because we're looking forward. And if the market is hiring people, that means they're expecting future revenues to come in. They are hiring. So that's still a good thing. That's positive. Another kind of back and forth sort of thing is GDP growth, right? One of the main barometers that we use to kind of measure the overall health of the U.S. economy was revised down for the fourth quarter of 2025 from 0.7% to just 0.5%. So to put it into context, Ever since the end of World War II, the average annual growth rate of U.S. GDP is about 3%. Well, right now we're about a third below that. That would be about an average of 2%.
So the GDP is not looking too healthy. Dave, take a look at that picture on the screen there. There you are.
I'm looking a little nervous about my ticker right there.
Dr. Wall Street and the U.S. economy. And the point of the slide is, Dave,
right.
and I get a kick out of these slides you create. The point of the slide is that we're taking a look at what the health of the economy is.
The big picture.
And if the gross domestic product, that's a measure of our production, is not keeping up, that's not really a strong sign.
That's not really a strong sign. However, it does oscillate pretty wildly, and we're pretty much on par for about the last decade, maybe being slightly below. But think of all the things that we've been kind of battling here over the last few years. Obviously, the tariff conversation, but there's a lot of volatility out there. We are investing in volatile times to kind of complete that metaphor, but we do have things that we can use to kind of protect those assets that we've grown over the last several years.
Yeah, good points all the way around. The economy has been battered a little bit. It's not growing as fast as we might like it to be.
Right.
Unemployment, not too bad. I got to think interest rates would be a big deal. I don't know who wants to talk about interest rates, but the Federal Reserve is going to have a chance to decide if they're cutting interest rates. Guys, what do you think? You want to weigh in on that?
Well, I personally think a cut is merited sooner rather than later, but when we look at what Wall Street thinks, right now, the highest probability of a rate cut, according to their measurements right now, is December of this year. And that's with only about 28% of Wall Street thinking that would be a possibility.
Dave, I got to interrupt you because we got another picture of us up here.
Oh,
just to liven up the show a little bit. I'm thinking I wish I could get interest rates as low as Dave's hair, and there you are in the background.
That's pretty low.
Dave.
I'm not going to lie.
And you're sitting underneath a sign that says to cut or not cut. I think that's great.
I meant my beard, but yeah.
I know. It's all good. In any case, back to reality. It would be nice to see interest rates get cut. When interest rates are cut, it's just a whole barrage of good things for parts of the economy. But at the same time, well, then you might think, well, why don't they just cut interest rates? Well, when they cut interest rates, it has a tendency to raise prices. And folks, if you're going to the grocery store right now, and I know we all do just about every week, you're seeing higher prices. I mean, who can believe some of these prices that you're paying for? I mean, beef alone, huge prices on that, on some of the staples.
And healthcare costs.
Yeah, healthcare costs are through the roof. So cutting interest rates can sometimes push some of those prices up, but at the same time, well, it'd be nice because it would definitely stimulate housing. That much I know for sure.
You got that right. Yep.
So be interesting to see if all that happens. Well, you know what? We're never going to make it through all of our other interesting things. How unusual is it that we have more material than we're going to get through?
It's never happened before in the history of the program.
By the way, Steve Poitras is still with us. He's just not on the program with us today. He's been taking care of a few things, and so we gave him a couple of weeks off here, and that'll be fine. But he's still with us, still doing his fun things and still contributing to the show. He'll be back. Speaking of being back, we look forward to the market being back completely. I mean, it's almost there now, isn't it, guys?
That's right. We're pretty close to the flat line. So,
yeah. So that's a good thing. Well, hey, here we are. You've been, for the last 30 minutes, watching Investment Talk TV, brought to you by the advisors at Legacy Wealth Management. And every Sunday, we get a chance to get together with you. If you miss our show live, you can always catch us on YouTube. Until next Sunday, for Dave McGatlin and Devin Beal, I'm Paul Meyers. Thanks for tuning in.